Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The New Zealand dollar has been re-rated sharply lower overnight, although to be fair, only back to levels it was in April. US benchmark interest rates are rising, but the new weaker New Zealand economy is expected to drive the OCR lower earlier than expected. But first in the US, initial jobless claims came in lower than expected too, at 194,500, a decrease of 10,000 from the prior week, when an increase of about that was expected by seasonal factors. There are now 1.75 million people on these benefits, 81,000 more than at this time last year. Meanwhile, the Conference Board leading economic index retreated in August. A retreat was expected, but it came in more than twice the expected decline. That means the leading index fell by 2.8% over the 6 months between February and August, a faster rate of decline than its 0.9% contraction over the prior 6-month period. They noted persistently weak manufacturing new order levels and consumer expectations, and warned of increased headwinds ahead. But it is not weak everywhere there. The Philly Fed factory survey for September picked up with a modest rise in new orders, but firms in the region remain under sharp price pressure, unable to pass on higher prices that they're paying. And on the farm, the giant American soybean crop is about ready for harvest, and farmers are glum. The Chinese aren't buying, and Washington isn't coming to the rescue with subsidy support. Prices are back to the 2016-2018 levels, and the rural concern is palpable there. In financial markets, there was a notably less well-supported US Treasury inflation-protected bond tender today that resulted in a median yield of 1.65% plus CPI inflation, compared to 1.93% plus CPI at the prior equivalent event 3 months ago. And there were more central bank reviews overnight. Taiwan kept its policy rate unchanged at 2%. They have an inflation target of 2%, and their CPI is currently running at 1.6%. Norway cut theirs by 25 basis points to 4% in what's been called a hawkish cut. They have inflation at 3% with their target at 2%. And the Bank of England held theirs at 4% as expected. They have inflation at 3.8% when the target is 2%. And South Africa held at 7%. Inflation there is 3.3% with a preferred rate of 3%. China announced that its Boeing and Airbus competing C919 aircraft has now received more than 1,000 orders, mostly domestic, but some international orders as well. And Australian labour markets stumbled somewhat in August, falling 5,400 when a small 22,000 rise was expected. And the detail is even less positive because full-time employment fell by 40,900, while part-time employment rose by 35,500. None of these changes were enough to materially affect their 4.2% unemployment rate, though. Container freight rates fell 6% last week from the prior week, with all the weakness coming from outbound rates from China. But bulk cargo rates rose 3.4% last week to be 14.6% higher than year-ago levels. The US Treasury 10-year yield is now at 4.11%, up 4 basis points from yesterday at this time. The price of gold will start today at $3,643 an ounce, down $15 from yesterday's post-Fed dip. And American oil prices are down $1 at just under $63.50 a barrel, while the international Brent price is just under $67.50 a barrel. And the Kiwi dollar is now just on 58.8 US cents and down 90 basis points from yesterday. Against the Aussie, we're down 70 basis points at 88.9 Australian cents. Against the euro, we're down 50 basis points at 49.9 euro cents. That all means our trade-weighted index starts today at just under 66 and down a bit more than 50 basis points from yesterday. And the Bitcoin price starts today at $117,553 and up 1.3% from yesterday. Volatility over the past 24 hours has again been modest at just on plus or minus 1.2%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.